Good afternoon, everyone. It's coming up to 6:30 here in the UK on Tuesday the 15th of June, and the tide has turned on the American market this afternoon, and as you can see, the Dow's off 130 points, Nasdaq off 94, and so far the S&P is off 11 points. Not the end of the world on any of them. But that's caused the short-term trend on VectorVest to turn to down. The buy-sell ratio is well back from yesterday, so the advice is not to be buying any shares at this time. That's very good advice indeed. If we have a look at the VectorVest composite, there it is. As you can see, it's the price was keeled over. It's hardly a train smash as yet after this big move up that we've had. So I've in fact had to get out of some positions this afternoon based on that. I got stopped out of AIG, and I was stopped out on the second part of the position at entry. I made some money on the first, and I closed the target position with a small profit. It was going nowhere, so I'm still holding a few positions. I've got a trade running in apps, which is still going, and I've got a trade running in Disney, which is still going, and I've got a trade running in the GDX. We'll look at a gold in a moment. If we have a look at the S&P, as you can see, the S&P is still north of this resistance level, and the low of the day is defined by that resistance level, and still hanging in there. So certainly the market has not pulled back by too much, so we're still above the 21-day moving average on the SPX. That's a really good place to be. Let's just be careful. It's been a very difficult period to make some money in markets over the last month or two. That's just the way it goes. This was really easy, and last year was really easy, but within this consolidation it hasn't been easy at all. So there's the gold market. The gold market, I'm pretty sure in my own mind that this is an impulsive move, and what we've got now is a pullback within that move. Clearly this is a very important level, and that's exactly where the market bottomed out yesterday afternoon, and it's pulled back here in three waves. An awful lot of money went into that yesterday afternoon at 1845. I'm afraid, folks, if that level doesn't hold, then there's probably quite a big pullback to occur here, and that'll give us a little bit of pain, that's for sure, in some gold stocks. For now, don't consider buying any gold stocks. If this particular level does hold, then I shall speak about that during the course of the week. The big market that's moved really well today has been oil. It's still pushing very strongly, and as you can see, there's the oil chart. That's the crude chart at $72. A huge amount of the market was caught short here because this was in fact judged by many analysts as a corrective move. In other words, this was the top, and this was a corrective move and was going to fall again. And when the market broke through the 78% retracement of this range, so many people had to cover, and it's now powering up, and there's an old high on the chart up there at about $80. It looks to me as if it wants to get there, and get there quite quickly. So in the UK, oil stocks have done very well today. I say Tullow Oil's up another 8 or 9% today, and even RDSB has moved up quite considerably for 2 or 3 days in a row now. So oil stocks having their day in the sun, and as I say, I have I haven't done anything in the UK. Pretty much everything's off a little bit today, but hardly, not anywhere near their stop losses. And if I look at the shares that I'm holding at the moment in the US, apps, as I say, and Disney and the GDX. That's the only three positions that I've got. I'm reasonably happy with apps. It's well in the money. I'm considering a position in in Zoom, which technically looks good to me, but I still haven't got into that. I was thinking of going into it today, but clearly the market is pulling back. So let's see what happens in the last session of today. Nothing to worry about yet, but a day to stand aside and let the market make its mind up. I hope you found this useful. Thanks very much.